Hi guys, welcome back. So, in my last video, I have given out 3 rules to follow to pick the stocks within these storms in politics and growth stocks valuation squeeze. So, number 1, the company has main listing or secondary listing in Asia, and number 2, cash sufficient. Number 3, align with government strategy. If you want detailed explanation on those, you can watch my last video. So based on these rules, I have picked several stocks that I would consider safe going through the storm. And the first one is Baby NIO. Obviously, people ask why I haven't covered too much about Baby NIO recently is because I think this is the least I worry about. NIO is going to be a more and more important company in China. It aligns with the government strategy in terms of the carbon neutrality. According to my crazy vision for NIO that I addressed before, it would be one of the infrastructure expanded by the One Belt One Road project because of the unique battery swap stations. It is cash sufficient because it raised funds a few times last year and this year. And in terms of electric car, Tesla is number 1, and for the premium market, NIO has good chance of staying the number 2. And for the lower range, I think the BYD would be very strong for that. And the next pick I have following these rules would be Xiaomi. For the US OTC ticker is XIACF. Xiaomi is constantly being down because of the political issue, and yet it is so undervalued. The company is making strong sale, growing still at a very fast pace. PE ratio of 22 now, considered quite cheap for a company growing at such fast speed. It's one of the first Chinese brands that is doing very well outside of China. Totally satisfying, actually one of the leaders in the Chinese brand export, especially in the recent years. As of right now, Xiaomi total revenue can be half from outside of China, so up to 50%. The company is making profit. It had turned positive profit a long time ago, so we don't need to worry about the cash, even if the share price keep dipping. It is very much the number 2 that wants to become number 1. It is mainly listed in Hong Kong already, while they have the ADR for OTC market, versus NIO that is mainly listed in the US, but NIO is also planning on their Hong Kong IPO as well. Xiaomi has invested 100 plus companies for the R&D, and more than half of them are in the chip sector, right after Huawei in China. This is the list of the chips company that Xiaomi is investing into. So I think Xiaomi would definitely contribute to the development of chips in China. So Xiaomi, very, very undervalued. I want to make a video to only focus on Xiaomi because I have such good hope for this company and I want to increase my position on this. I might even bump it up to my top 7. And next one, following the last one, it is one of the companies in the Xiaomi ecosystem now, Zepp Health, ticker symbol ZEPP. Because I only recently did a few videos on Zepp in the past week, so I don't think I need to go really thorough into Zepp. So if you want, you can watch my past videos. In terms of what it can grow into, the sector, the addressable market, the government support potentially, and the fact that they are already making their chips for many years and have been doing well in foreign markets as well. I think Zepp can do well and can be resistant through the storm and also with a much bigger upside potential. Now for the chip sector, I don't think we can directly invest in the chip maker in the US because the US government might potentially delist all the chip making companies that are Chinese. For example, listed in Shanghai. Look at the parabolic move. Despite all the political drama, ever since the bottom in March, another chip maker, same thing, has gone nothing but up. This was the peak in February. It's like no correction matters to this sector, outperforming any other sectors. Next pick following the rules would be JKS, JinkoSolar. The whole solar sector had been growing very well in the Chinese market. JKS had the secondary listing in China already. It is one of the leaders in terms of market share and also quite undervalued with little influence from the politics, except the Xinjiang issue potentially. So if you don't want risk, maybe the previous ones would have less risk. And I think right now both the chip and solar sector had gone up quite a lot. So if the market correction gives it more of a pullback, it might be a better buying the dip opportunity. Now, these are the stock picks that I picked out by following the rules in order to find a bargain despite the political storm and the market uncertainties on the growth stocks. So then you can still feel safe picking up the falling knife and still be able to sleep at night after picking up bargains. And they are NIO, Xiaomi, Zepp, BYD, and JKS. So I have picked out 5 companies based on these rules, but of course they don't cover all. So you can use my list of the rules to see if your companies will satisfy, so then you can feel more safe. And in terms of the chips company, I do need more research on this sector because I really don't see anyone that's not listed in China only yet. But if you have any suggestion, you can feel free to share because that might be a great opportunity as well. Now, maybe you might wonder why in the 5 picks, I only cover 2 of my top 5 positions. So I'll go over with the rest. For EH and LKCO, these 2 would be more like pre-revenue companies because the technology is still quite early or the application is still quite early. And when the market is not performing well, the pre-revenue companies usually can drop harder than the ones that has revenue to support now because the intrinsic value is higher. For example, Zepp and Xiaomi, this intrinsic value is there to support the share price to found a bottom versus the pre-revenue companies would be more based on the market sentiment for now because it is projection for the future and gives out more uncertainty. So I would say EH and LKCO would be more speculative play at this point because it is high risk and high reward. So it depends on your risk tolerance. And also, on top of that, they have not announced any plan to have a secondary listing in Hong Kong or China, Shanghai or Shenzhen. But if they do, it would give an extra insurance on that. So pre-revenue and not having a secondary listing yet would in fact give more risk than the previous ones I mentioned. And for Luckin Coffee, I still think it is undervalued. All the reasons I gave to be bullish on Luckin Coffee from my previous videos is still true, all of them. On top of that, I still think Luckin Coffee would be a good hedge against the geopolitics issue. So the fact that I don't include this into my picks for investors who wants to feel more safe through the storm and still able to sleep at night doesn't mean that I'm not bullish on them anymore. And an extra note for the crypto related stocks. They're not only under the pressure for crypto recently, but also under the pressure of the politics. It might hit this sector more than the other sectors because if anything happened, they might have trouble getting secondary listing in Hong Kong because cryptocurrency related business is not accepted in the Hong Kong exchange for now. So at this stage, the insurance possibility is low for these. So keep that in mind. For NCTY and CAN, I have not sold out of my position. I set stop loss for part of the shares before, but still holding part. But at this point, they are quite beaten down already. There's no reason to add on the fear right here. But if it dips to the lower support I mentioned before and also shows signs of bottom or stability, I might be looking into adding more to average down. Okay, now if you have enjoyed this video, please give me a big like and write me a great comment. And I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.